Hello, hello, hello. What's going on, everybody? Welcome to Al Stock Trades, reporting for duty, Friday night party. All right, guys, this is going to be a quick one. All right, so in this video, like what we said in the title, we're going to be talking about Alignment Healthcare earnings in regards to what we can derive from it for our earnings for Clover Health next week. So we're going to kind of run through very quickly. So Alignment reported earnings yesterday, and stock didn't fare too well today. Obviously, a lot of healthcare stocks didn't do too well. There's an investigation, and which if you guys haven't seen it, you should look at it. But the stock literally had a 17% fall, and now we're at 34.34% on in terms of outperforming or not, you just kind of the performance year to date for the beginning of the year, about 34.34%. Now, a lot of folks were saying, well, Alignment was, outperforming Clover on year to date. I would say you always have to zoom out. From a year perspective, 421% Clover is performing, Alignment 195, right? Yes, it's true. In the past couple of months, Alignment definitely has performed a lot to a point where it's always up more than, it's performed a lot. It was up more than 71%. Now, of course, Clover did have a little bit of that. It was on track, but then Alignment kind of took it over. And sometimes you have to ask yourself, did Alignment run up more than what its current evaluation is? And did it have a pre-anticipatory run? Or was it a sophisticated sell-off? So to answer that question, you really need to have data. You really can't, it's not like you can shake an 8-ball, right? But overall, right now, Alignment Healthcare has $3.07 billion of market cap, and then Clover is 1.69. So about 50% of the market cap of Alignment. So we can say just double the stock price would equate to Alignment's market cap, right, for Clover. So like I said, in terms of past couple of videos, the VIX has been stabilizing. It's dropped another 7.8%. In fact, it's been dropping precipitously since the big peak here, 56%. Still up on the year, but ultimately it is dropping subsequently. The stock market has been going up like crazy. You could see that S&P wipes out losses from Trump tariffs with a historic winning streak. A lot of stocks, especially the stocks that we've talked about, which is reporting this week, HIMSS is up a lot. I mean, we're talking, the tariffs really got to it right here. Let me just zoom in. And it's up now 61%. Palantir is, forgot the R there. Palantir is pretty much increased by 67% for potential to go up another 91% before potential stabilization. We'll see. But ultimately, the market is coming back, even though tariffs uncertainties, people are scared of a recession. And as you can see, dumb money is starting to come back hard and smart money peeling back off. And you can see, it looks like there's some form of a recovery happening, and maybe the bottom is placed in. So it looks pretty good, and pretty much Wall Street did it again, scaring retail investors, thinking that there is some form of a recession happening. They did it again, but yet the patient investor and the one that is the intelligent investor is the one that essentially gets the cake and wins. Wealth is transferred from the inpatient to the patient. So with that, let's go ahead and talk about Alignment. So we talked about this. We talked about this WIG breadth thrust indicator. Pretty much it's confirming that yet again, it is correct. Tariff deals are going to be announcing soon. So for Alignment, the revenue was I can't speak. I'm like right. So Q1 2025 revenue is $927 million, up 47% year over year. Health plan membership is 217,500 members, up 32% year over year. Adjusted gross profit is 107 million, an increase in 87%. And also the medical benefit ratio, which is kind of Not like, it's not the same as the medical cost ratio before people say, no, it's not. But it's ultimately the same categorization from a heuristic model that you can put in your brain. So it's 88.4%, which is an improvement of 250 basis points. Adjusted EBITDA is 20 million with 410 basis points of margin expansion. So here's the updated 2025 guidance. I'm actually excited to see the guidance for Clover Health. They raised the midpoints, which is impressive. So I expect potentially Clover Health could raise its guidance as well. Membership 228 to 233,000. Revenue 3.77 to 3.815 billion, 40% approximate growth. Adjusted. Sorry, my dog just came to me. He wants me to pet him, so I'm just petting him. He's so cute. What? Oh, he doesn't want to go in the crate. He's like, I want my Baba. No. All right. So, okay. So let me see where we're at here. Okay. So he doesn't want to go in the crate. So he's protesting. It's okay. He can be next to me. So 49 million midpoint. SG&A fell. So that's good. Improving 100 basis points. Let's see what else. Strong inpatient utilization control across. So they're doing some form of inpatient control. So, hey, we have another competitor in the ballroom here, bro. Once we talk about the financials, you'll start to see which company actually is able to translate more of the revenue to free cash flow. Let's see here. They're talking about expanding into different markets. You guys can go ahead and pause it and read this. I'm not going to read it for you, but you can look at my due diligence here. Star rating advantage, of course. They got 4+ stars in Cali. In 2020, something was it here? Either in 2026 or 2027, they're going to be moving into other markets. That's another thing I want to mention. Let's see what else. And they're doing a CFO transition. So pretty much right on par. You can analyze what they're doing. We're going to do it right now. But honestly, this is pretty much it. What I am going to do right now, just so we can run the data, I am going to open up alignment here. Okay, we're going to open up Q1. It already loads up from our stock terminal. And then what I'm going to do is I'm just going to have it generate insights. Oh, access restricted. Looks like my access is restricted from generating insights. Oh boy. So let's see. Looks like I don't have access to the generate insights. So let me make sure. That's hilarious. Like, what? I don't have insights? Oh no. Well, what are we gonna do? Let's see here. Let me see. Okay. So that's kind of funny, no? Let me see here. Let me go full screen. Let me go here. Let me go here. And then we can exit this. Okay. There. So, yes. So, Tommy, you are correct. Tommy said BlackRock added today. Another company did too, but I forget. But I went ahead and released this information. That's really inspirational. And this is retail investors here. That's B-Rob. B-Rob, that's you. I'm just kidding. Let me see here. Now, obviously, that's not B-Rob. B-Rob has been buying since 60 cents. No, what's where'd it go? I mean, oh, here it is. Yeah, so we posted it. BlackRock, right? BlackRock, right? Just upped its CLOV position 3.22%, now holding 10.37 million shares, which is 37 mil on dollars. So good. Yeah, absolutely. Good job, Toms. Good job. All right, so let's go ahead and do that. So what I want to do is I want to look at the earnings for alignment. And then we'll do this here. And then we're going to hit generate insight. Oh, great. I have access. Jesus Christ. All right, so let's go ahead and put this here. And I'm going to have that load so we could, I don't have to, we can wait for it here. Okay, so we talked about this. Now let's pull up the transcripts, or not the transcripts, the what do they call this? The 10Q. Jesus Christ. Okay, so Let's look up. Let's see, what page is it on? Page 7. So we'll go to page 7, and we will make it a single page view. Let's zoom in and let's analyze this. So here's net cash provided by operating activities. And then here is acquisitions of property, plants, and equipment. So they had an operational cash flow of $16.6 million. Last year it was negative. You see, the parentheses means negative in accounting, right? They had negative 6.2 million, right? So they're actually positive operational cash flow. In fact, they're actually positive cash flow, free cash flow this year. So we'll talk about that. But first, let's load this. This is loading now. This is the earnings transcripts for alignment. So this will give us a lot more analysis regarding kind of what's going on here. So it's just kind of doing its thing. This is for alignment. Let's zoom in real quick so we can read it together. But yeah, so as it's typing, we could talk about this. So Alignment Healthcare, for the first time in Q1 history, is operational cash flow positive to a point where they're free cash flow positive. So that's actually very important. That's actually very bullish for them. Let's go ahead and read this real quick.
Conclusion. Alignment Healthcare is uniquely positioned to outperform peers in 2025 to 2026, driven by STAR 28 tailwinds, scalable, clinical ops, and tech-enabled cost management. Strategic focus should balance growth, new markets with profitability, PM optimism shine, while monitoring regulatory and competitive risks.
Yeah, so it looks like they're going to definitely outperform. They're doing a really good job with this. But now, let's see what's going on here.
Key positives. 1. Strong top line growth. Membership grew 32% to 217,500, driving 47% YOY revenue growth, $927 million. Exceeded high-end guidance across key metrics, membership, revenue, gross profit.
You see how powerful this is? You know how much time this saves you from reading the transcripts? It just gives you the most important. Like, who has time? This gives you what you need. You see how powerful the stock terminal is?
Adjusted gross profit.
So we could just kind of look at this. So they got a 250 point. Oh, here it is. Operational efficiencies.
Operational efficiency. Implement model scalability.
Here it is.
Inpatient admissions for 1,153 CA, 145 XCA, outperformed expectations.
So that's pretty good. They have some type of technology driving cost containment and care coordination, particularly for high-risk groups. That's interesting. That's a competition for Clover.
Stars advantage. 100% of CA members in 4+ star plans versus competitors 59%. B28 risk model. Less impacted than peers, creating relative pricing power. MS rate notice. Negative 9% weighted average rate increase versus 5% in 2,725.
You see, it's why I told you. They got everyone got bailed out, right? This is why. So you remember I told you about Trump, about Mr. Trump? CMS rate notice, there's an 8% weighted average rate increase. Technically, it's 9%, but that's why there's an approximate here. There's a little approximate sign there. We can zoom in here. That's kind of annoying. Approximate sign here. So yeah, versus the 5%. So this supports growth, margin, and flexibility. Whatever, that's fine. It's just Clover didn't need it, but whatever, it's fine. You can tell I'm not happy about it, but it's okay. It's the name of the game. They're obviously trying to scale. Health Equity Index reward quality for complex populations, aligning with Alignment Healthcare strength. So this also aligns with Clover's strength. So obviously, Clover's building an insurance company that's going to be successful for the future, same as Alignment.
Strategic recommendations. Capitalize on 2026 rate tailwinds. This strategy. Balance growth.
So the rates are going to be increasing, so they're going to capitalize on those tailwinds. They're going to accelerate ex-California growth. Nevada and North Carolina, so they're stepping into the woods of Clover, near almost near Clover. So Clover better step it up also in alignment markets as well.
Prioritize the ROI. Sunset low efficacy modules. Expand high impact care coordination tools. Pharmacy cost controls. Partner with PBMs for specialty dual carve outs or rebate.
So they're trying to go and diversify revenue streams to go to Medicaid and ACO REACH to reduce MA dependence, given the uncertainty in MA. So they're trying to mitigate risk by diversifying in other markets. So it'll be interesting to see where Clover Health is going to be. I mean, they're happy with the MA market, but we'll see what they say.
Stars compliance. Proactively address CMS audit risks, e.g., coding accuracy, penny gaps. Financial outlook and market positioning. 2025 guidance raised. Revenue 3.77 billion.
So they raised guidance, like we said. The projection is greater than 20%. All right, we talked about this. All right, good. So I got a question. Thrash here, you're so funny. Tommy, yes, tell me. Any idea when Clove becomes profitable? Tommy, you raise a good point. So let me go ahead and just show you. So if you go to the earnings report for and listen to it, Peter said under his breath, it's going to be 2026, right? But again, that's one data point. I like to look at others. This is our proprietary stock terminal that you can get access to lifetime access. All you have to do is hit analyst estimates, and then it'll go ahead and give you some graphs. And you could go ahead and scroll down here and look at net income. Nope, that's the wrong one. I'm sorry. Net income. And you can see this is 0. Where does it cross 0? Oh, right here. So they're expecting profitability in 2028 to around 85 million. Now, obviously, it used to be 2026, but they changed it. Now, I don't know kind of the situation, or maybe they're returning to growth potentially, but I think they're going to reach profitability in 2026. That's what I think. But you could see Wall Street thinks 2028. But I think there's some misconceptions here. But you could see profitability is in the horizon, Tommy. Okay, good job. So let's so we talked about that. Now, okay, let's go back to free cash flow. So they're pretty much free cash flow positive now. Now, of course, we can pull this up on our terminal here. We can look at alignment, and we can look at the quarterly here. And you can see here for operating cash flow, you could see 2025 Q1 turned to free cash flow positive. And the thing is, though, CapEx spending is not updated yet because alignment hasn't updated it to the SEC yet. So our system hasn't captured it, but our system captured a lot of other things, like the 16.62 million of operating cash flow. And if you were to look at Q1 of 2024, it was negative 6.24, which is what this number was here, right? 6.2, and then they upgraded our terminal to 4. So you could see that went from negative to positive operating cash flow. So you could see this jump from Q1 here to there. So obviously these are operational efficiencies, meaning that alignment is becoming operational cash flow positive from the first time ever. Obviously Q2 and Q3 it was, and Q4, but they've been but they were free cash flow negative to negative 17. Now we can take the CapEx 16.16 subtracted from 8.2. So they have about 8.4 million of free cash flow. Okay. So alignment now has 8.4 million of free cash flow. That's impressive. Now, obviously, their free cash flow does go up here in Q2 and Q3, and obviously Q4 was negative. So assuming we could go ahead and downplay it, but obviously I think their Q2 and Q3 cash flow is going to be a lot higher, but we could go ahead and kind of do a false multiplier and figure out the growth rate here. So if we do that and take 8.4 and we multiply that by 4 quarters, we get 33.6 million of free cash flow. Now to go ahead and look at the intrinsic value, we can go ahead and do that. And we could put the free cash flow for alignment, which is 33.6. That's obviously undervaluing them, but we'll do 33.6. We'll upgrade. And if you look at the 29% growth rate, they're growing at 47% now revenue. If we do that, then alignment in the future, if they continue growing 47%, you'll see a higher stock price. But let's grow them humbly at 32%, which is an approximate around a 30% reduction in growth rate. And what you do is you get a bull case of $18.71, a base case of $12.71, and a bear case of $9.21. So right now it's currently trading at $15.53. But you can see ultimately it's nearing the halfway point between the base and the bull. Now, why is that important? Well, if we take a 30% reduction, approximately of a 37% growth rate for Clover, who knows, Clover may grow more. That's an approximate 23% growth rate that we can assume for Clover, okay? The question now, and the $1 million question we have to ask ourselves is, for Clover's free cash flow, what is it going to be? Is it going to be more than 25 million or less? If it's less, I expect the stock price to go down. It's not going to be bullish, right? In the interim. Long term, of course, because the new members that they're bringing on are ultimately going to become free cash flow generating machines. Okay. So, but let's assume it's 25. Let's assume it stays the same. This 86 million here, technically it's subtracted from 47 because 47 million is discounted cash flow. Discontinued cash flow from operation. You could fact check me by looking at the SEC report from Clover that they announced last year and also in their 10K. But what you could do is you could take 25, multiply it by 4, or just here, multiply it by 3. Or you know what? Let me think. Because we have to be humble, right? With our calculation, but we can't be too humble because you can see 44.36, 49. These are all big numbers here, which I'm saying that's going to be 25 for each quarter, and that's not fair. That's reducing it by half. But the question is, I don't know if it's going to be more or not. You see what I'm saying? So how about this? Let's take the average.
25.49, 44.36, 49.59.
Let's add all these together. Because again, I don't know. I'm not going to know this until next week, but let's add this together and divide by 3. So about 39.81 per quarter. So you multiply that by 3, you're going to get 119. Let's say Q4 is still free cash flow negative, and we'll say subtract 39 million. That's 80 of free cash flow, which is exactly what Peter said they were in 2024. So potentially 2025, they may still be 80. So 80.43. So to calculate the intrinsic value for Clover, and it's all part of our premium stock terminal. Just so we know, I'm taking this number here, 80.43, and I'm injecting it here. And instead of doing a 37% growth rate, I'm going to do 23% because, well, first let's do 37. So if they continue growing 37%, then yes, you can see Clover $24, right? 11 to 24. But right now, because everyone's skeptical, including Wall Street, that they can continue growing like this, obviously they're going to return the growth. But let's offer the same 30% reduction. So that's a 23% growth rate. So with that, you have a recession case of $2.43, a bear case of $4.74, a base case of $6.39, a bull case of $9.29. So if we were to go ahead and take the difference, take the bull and the base of 920 plus 639, you get 1559. Divide that by 2, you get a stock price of $7.79. So we'll call it $7.80. And if we were to take $7.80, divide that by 2, you have a market cap of 3.9 billion. So that's kind of where we're at there, which obviously is more than alignment. But the thing is, we should see alignment start tracking higher. But based off of the reason why Clover is able to make more of an intrinsic value mark than alignment is look at the revenue. $1.3 billion of revenue gives you 33 million of free cash flow. Look at the CapEx spending for Clover. It's barely nothing. They reduced their spending like nothing. Look at Alignment's CapEx. Alignment's CapEx is insane. It's $41 freaking million. They're investing a lot. Versus Clover, its CapEx is literally nothing. It's less than $2 million. So, and if you look at Alignment with 2.7 billion of revenue, it's still negative 6.65 million of free cash flow, right? So you can start to see the situation here, right? And then we can't discount that we had an ACO payment last year. So technically, Clover is 100 times, so 100% more profitable than Alignment. Because if you look at the gross margins here, it's 10.97 for Alignment, but for Clover, it's 26.61. Okay. Likewise, this is our new. I gotta find it. Where is it? We have a lot of terminals here. It's pretty impressive what we were able to create. Wow. I didn't load it up. Let me load it up for you guys. Hold on. It's the new taker. I call it the Undertaker. Just kidding. So let's go ahead and load this up, guys. And let's put full screen. So this is called a financial engineering ratio engine. And if we do it and type Clover, you have price to fair value. Okay. Now let's go ahead. This is graphed. It's hard to read this because in 2019 there were negative 233. The problem is none of these numbers matter for Clover because they weren't even traded on Wall Street. So I'm going to double click this and it removes that data. So now it's scalable so you can see the difference. Clover's price to fair value was $4.50 now. Okay. And you could see that the fair value has been increasing. In fact, if you look at it from a quarterly perspective, you could see how the fair value dipped in Q1, but in Q2 it rose. And it literally is a prognostic indicator of where the stock is going, right? You could see kind of where it is, right? So I expect it to be near the $4.50 region. Now, there's another way of reading this metric, which you can go and click here. Above 1 implies overvaluation. Below 1 suggests, or near it, suggests under. Now, historically, I've never seen stocks under, right? But what this does is it takes the current stock price divided by the intrinsic value. An intrinsic value that is a lot more strict. That says the intrinsic value for Clover is near its book value. Or, at least that's where it is now. The reason why I say this is look at Alignment. If you look at Alignment's price to fair value is $33 now. So I expect that Alignment is going to slowly start creeping up to $19, $21 to $33. And of course, it's already creeped up to $21 before. So it's not like we don't know this, right? So what this tells me and what this gives it to me is it tells me that Alignment is 33 now. And the fact that it can be 33, especially at its own intrinsic value case, and the fact that more than 80% of the stock, I think it's controlled by institutions, we can say that 33 divide by 4.5. Which gives you around 7.3x of over evaluation of Alignment as geared to Clover. If Alignment had Clover's balance sheet with its free cash flow, we could expect it to have a higher stock price. By how much? Well, we could take this multiplied by 4 and you could see $29. Doesn't that sound about right? So what this tells me is that in the next 2 to 3 years, we are going to be seeing Clover stock price around $30. I think it's going to be a lot sooner, but definitely within 5 to 10 years. If you're not comfortable waiting that long, then you shouldn't be invested in the stock market. Go to Vegas. This is not the channel for you. All right. This is not, we don't like to do hype. This is pure analysis. And I don't, like, we monetize our videos to help YouTube kind of push the algorithm, right? But this video makes maybe $2-3, right? I don't care about the, in terms of the money, right? It's nothing, as you all know how much money I already have. The point of making these videos is to educate you, so you can break out of this matrix, right? Because and unfortunately, dumb money is dumb money, right? You can take a horse to get some water, and the horse you can't force the horse to drink, right? But ultimately, I think that Clover is going to get to that $30 range. This is the financial engineering ratio. So you can see these are all equations. Like, look at this, is called cash ratio. Cash was cash equivalents divided by current liabilities. Higher ratio indicates strong short-term liquidity. Okay. Right. So you could see kind of where it's at, right? Look at, from the annual perspective, you could see kind of where Clover's at. You could see it's gone up, right? Right. So you can look at the quarterly, look at the cash. You could say, oh, what happened? Oh, wait. Sorry. This is for alignment. I'm looking at rule number 1, make sure you have the right stock. So you could see what happened. Well, because they have to pay that money from ACO, right? These are all metrics. Like, look at 2023 cash ratio. It went from, you could see 2021, it went from 80.8 to 0.23. 2022 is bad. Then it jumped to 0.47. Why do you think I was bullish? Because it was going up. Because look at the cash ratio. Let me graph the cash ratio. Look at we can remove this and remove 2018 because they weren't even publicly traded. Look at the cash ratio. It's finally going back up to where it was in 2020 and 2021. And how much was the stock price in 2020 and 2021? It was $8, $10, $15, right? Again, like I told you, how do you think I was bullish on Clover? Because I had access to all this data. And now I'm showing you this data, and now you can get access to it too by using the SAS coupon code and joining our lifetime access. These are all equations. These are all equations, ladies and gentlemen, that are all calculated. Here's current ratio. It shows you the calculation. And it automatically populates. You don't have to do any freaking math. Our proprietary stock terminal does the math for you, and it explains to you the math. And you can hit the enhanced AI analysis, and it breaks down the math, and then you can see what changed in 2024. And then soon there'll be a generate insights button. When clicked, will allow you to go ahead and well, this is still beta. I'm still working on this. I'm surprised. It's pretty funny. Anywho, this is still beta. It just says the same thing. I'm surprised that I coded it, but it should not work. But soon you will see a long line that takes all this data and all these equations and gives it to you in a sophisticated manner. And this will be part of our generative AI. Okay. But you can see all these equations get given to you, and you see how powerful that is. This is the power of the stock terminal, right? Right. It's just, listen, I have no time to bullshit, right? I want to make money, and I want to have a product that does it, right? I have access to a Bloomberg terminal. Other people don't, right? So I pretty much built my own terminal, and now I'm sharing with all of you guys. And I hope that you can see the patterns. Maybe about 10%, 20% of you see the patterns. The others are like, what the hell is this guy talking about? And, for all the people that do understand the 20%, let me tell you something, guys. Okay. That's your edge. That's your edge. Okay. When people were selling the stock in 2023, especially in 2024, when it went down to 60 cents, I was buying because I'm like, wait a minute. They're having more cash now. Their cash ratio is better. they're becoming better, right? So again, we could go in more, but ultimately their debt ratio is becoming better. We'll go into the specifics of it later on, but ultimately, there's that. But the big thing, the big takeaway is that from this video for alignment is that alignment is operational cash flow positive for Q1 and also free cash flow positive for Q1. That's a tremendous development. Okay. Now, very quickly, since I let's look at the markets because I haven't done this yet. Yeah, you see this? Oh man, what a beauty. What a freaking beauty. So this is Alignment Healthcare. They became bullish right here, right? Smart money became bullish. And the stock price, you can see 1, 2, 3. The stock price pretty much soared. You can see the stock price soaring. You see how amazing this is? So you might be asking, well, what's Clover's? Well, first let me show you Palantir's. I already showed you Alignment. Look at Palantir's. Look at that. Smart money here. Boom. The yellow is the stock price, right? This is the stock price. It soared. Now let's look at Clover. Uh-oh, they just became bullish. So what does that mean? It's not rocket science. You can figure it out. All right, now let's look at Clove. This is called the Quant Flow Terminal. I haven't used it in a while, but I wanted to show you. So let's go ahead and look at this. So this is why I'm pretty bullish. Let's kind of remove. Let's remove this. Let's focus on this. So this is our Outstock Trades proprietary quant flow. And you can see that the quant flow is above the blue line. It's slowly dipping, but it could reverse just like it dipped here and then it reversed. Let's look at you can see kind of there's a lot of buying pressure at the $3 region. Now we had a lot of selling pressure. Let's look at the some buying pressure 352. Okay, let's look at this. Okay, yes, good. So let's go remove all this, clean up the data. So we broke the trend here. We broke it. So February 18 is when we broke trend. The quant flow says that's it. We're breaking trend. And then March 18 is when you see how powerful this is? This is impressive. March 18 is when we the trend line was above the proprietary quant flow. So I'm curious to see what the stock price was in March 18. These are all our terminals here. So here's March 18. See, isn't that beautiful? Oh, wow. So the March 18 is when we started the quant flow, but then the stock price is down 12.34% since that overflow. So what that tells you now is that people are buying this. You're getting more buyers. You're having more buying power than selling, even as the stock price is going down. So this is a divergence, and this is incredibly bullish, because you're having a stock price go down, but the quant flow is going up. You see how interesting that is? That's incredible. So essentially, buying pressure is getting so what this basically tells me is that there's going to be pent up buying pressure, unless this thing breaks again, that will send this stock up higher. Because it kind of makes sense, because nothing's changed fundamentally. All thing that's changed is the tariffs. I'm curious to see what's Tesla's. Let me look at Tesla's for a sec. So here's the quant flow negative, and it's becoming less negative. And as it's becoming less negative, which means it's becoming more positive, the stock price is still decreasing until it just exploded, and then it went up from where it was here at 228. That's very interesting. Let's see. Let's look at Clover. So yeah, so you can see here that it's down and it basically shifted up here. And you can, the longer the time frame, the more you can see the shift up. So this pretty much tells you that, you know, you should definitely buy people. This tells you what big money's doing, right? They're buying the dip. Big money's buying the dip. That's what this is telling you. And ultimately it's because we had some crazy selling pressure here, right? A lot of institutions, they sold the crap out of it when it squeezed. Now you have a look at all that buying pressure, right? And in the blue. Let's look up alignment. So here's alignment. It literally switched and it exploded here. I'm curious to see on the 3-month cycle. So it was above. Let me clean it up. It was above, and now it's basically starting to fall. So who knows? Is Clover about to fall? So now it's breaking trend line. So maybe now alignment's going to be in a bearish seasonality and it's maybe going to retract, maybe back to the base case, right? Which you can go in the beginning of the video to see what it was. So there's that. Let's look at institutions, score it, or let's do 25. So look at the number of new positions or increased positions. It's gone up tremendously. So I'm very bullish. You're starting to see Bloomberg come in, not Bloomberg, BlackRock. I'm mixing my B's here. And we're going to go and dive more deeper in the financial engine ratio analysis here. But what I also want to do really quickly is I want to look at the cash in the beginning, cash at the end. Go for the quarter, see if we can have access to it here, because they just reported, and we do have access.
Cash at beginning of period.
Here's cash at the beginning, cash at the end. I'm just curious because they're operational cash flow positive now. So you could see, look at that beauty. Let's remove the free cash flow here. Look at that beauty, right? So they're doing the right thing. Alignment's in a good position. Okay. Let me go ahead and go to unless Clover executes really poorly over the next 2 years, they will rise 100% reach profitability in 2026. I agree. Absolutely. And we also have the SaaS revenue that's coming soon. From what they have said, and with tailwinds from last year's enrollment, I think, yeah, absolutely. Absolutely. Yeah, there it is. Of course, yes, they have that incentive. So yeah, it was a bit kind of a quick video, guys. Sorry, but I just wanted to kind of point all this out. The big thing I wanted to communicate to you guys is Alignment Healthcare, TLDR. Alignment Healthcare turned OCF and FCF positive for Q1 for the first time, and it's on its way. And I think Alignment's progression is prognostic of Clover's progression, at least for now. So that's pretty much it, guys. I hope this was helpful. We're going to see kind of where things are at. I think this whole tariff situation really messed up Clover for no apparent reason. And I think now we're, the fact that it's still positive when the whole market was negative should tell you something, right? So there it is, guys. I appreciate you a lot and happy Friday.